Level 1, $10. You open your bank app before breakfast and see $10.43 sitting in your account. For a few seconds, you feel relieved because at least the number is positive. Then the notification arrives. Monthly account fee, $12. Your balance drops below zero. You stare at the screen because the money you had is gone, and now you owe the bank more than you had when you woke up. You call customer service and explain that you barely use the account, that you only have a few dollars left, that the fee is larger than your balance. The representative sounds polite but distant. She tells you the fee is automatic and cannot be removed. You ask for a supervisor. She puts you on hold. The music repeats. You listen to the same 20 seconds again and again until you realize that the bank has already decided what your time is worth. You hang up. That afternoon, your paycheck arrives, $480. You feel the pressure leave your chest for the first time in days. Then rent takes $350, electricity takes $48, your phone takes $35, and groceries take another $32. By evening, you have $15 left. The bank doesn't call you. Nobody congratulates you for surviving another month. Level 2, $500. You finally build a small cushion. It took 3 months of skipping restaurants, walking instead of taking rides, and saying no to things you actually needed. You reach $500 and think this is the beginning of stability. Then your car needs a $420 repair. You stare at the estimate for 20 minutes before approving it because without the car, you cannot get to work. Your balance falls to $80. The bank never asks why. The system simply records the transaction. A few days later, another bill arrives and pushes you close to zero again. You consider a credit card, but the only offer you receive requires a security deposit. You give the bank $200 of your own money so it can give you a $200 credit limit. The interest rate is high, the benefits are almost non-existent, and yet the letter calls it an opportunity. You accept because when you have little money, almost every financial product begins to look like a lifeline. Level 3, $3,000. 1 year later, something changes. You have $3,000 saved. Not because life became easier, but because you became more careful. You stopped buying things you wanted and started planning for things that could go wrong. The bank notices the balance. Suddenly, emails appear in your inbox offering personal loans, credit cards, savings products, and investment accounts. The same bank that charged you fees when you had $10 now wants to help you manage $3,000. You apply for a credit card with a $5,000 limit. Approved. You read the notification twice. The approval feels less like a reward and more like proof that the system has finally decided you are worth lending to. You walk into the branch and the employee asks if you need help. At $10, you were invisible. At $3,000, you are useful. The difference is only a number on a screen, but the way people speak to you has changed. Nobody says it directly. They don't have to. Level 4, $20,000. You keep saving. Your balance reaches $20,000. The first thing you notice is that fees start disappearing. The minimum balance requirement is no longer a problem. Some charges are automatically waived. Your savings account earns a better interest rate. Your credit card limit rises without you asking. Then, one morning, your phone rings. It isn't an automated call. It is a real person from the bank. He introduces himself as your financial advisor and says he would like to review your accounts. You almost laugh because you remember begging another representative to remove a 12 fee years earlier. Now the bank is calling you. He asks about your goals, your plans, your investments, and whether you expect to buy a house. You realize that the conversation is not really about helping you save money. It is about finding ways for the bank to make money from the money you already saved. But you don't mind because for the first time, the relationship feels mutual. Level 5, $100,000. You cross $100,000 almost accidentally. Years of saving, retirement contributions, investments, and one promotion have finally pushed you into 6 figures. The bank sends a congratulations message. Your advisor calls personally. Your account receives a new classification. Preferred client. The words appear beneath your name every time you log in. You notice small changes immediately. Calls are answered faster. Fees are easier to reverse. Loan offers arrive with lower rates. You are invited to financial seminars where the coffee is better and the chairs are softer. One afternoon, you need a $40,000 loan for a business opportunity. The application that once would have taken days is handled quickly. The bank doesn't ask whether you can survive the payment. It asks whether the opportunity makes sense. You realize that money has changed something deeper than your balance. It has changed the amount of uncertainty other people are willing to tolerate around you. When you had 10, every problem looked dangerous. At 100,000, problems look manageable. Level 6, 1 million. You never imagined seeing 7 digits beside your name. When it finally happens, you refresh the screen 3 times because you think there must be an error. There isn't. Your advisor congratulates you and introduces you to a private wealth manager. The new manager doesn't ask you to visit the branch. He offers to come to your office. He arrives with reports, projections, tax strategies, investment options, and questions about your long-term plans. The conversation lasts almost 2 hours. Nobody asks whether you need a credit card. Nobody talks about overdraft fees. They talk about preserving capital, protecting assets, reducing taxes, and transferring wealth. You notice the language has changed. When you were broke, the bank sold you products. At 1 million, the bank sells you strategy. The difference is not necessarily that the strategy is better. The difference is that your money is now large enough to justify someone's time. You finally understand what the system was always measuring, not your character, not your intelligence, not how hard you worked. It was measuring the size of the relationship. Level 7, 10 million. At 10 million, you stop thinking of the bank as a building. You stop waiting in lines. You stop calling general customer service. You have a direct number that goes to a person who knows your name. When a transaction is delayed, someone handles it before you even notice. When a new investment opportunity appears, your advisor sends it to you privately. You are invited to dinners with executives and other wealthy clients. The conversations are different from the ones you heard when you had $10. Nobody talks about whether the electricity bill can be paid. They talk about acquisitions, markets, real estate, businesses, trusts, and opportunities that never appear in advertisements. You begin receiving offers before products are publicly announced. A banker tells you about an investment that is still being structured. You ask why you were contacted so early. He smiles and says, "We thought it might fit your portfolio." You understand what that sentence really means. Your money gives you access to information because access itself has become part of the service. Level 8, 50 million. Something even stranger happens at 50 million. The bank stops treating you like a customer. It starts treating you like a relationship that must be protected. Your private banker has fewer clients now. Your calls are returned almost immediately. Meetings happen wherever you prefer. If you want to discuss an investment, the people who created it come to you. If you are considering moving money to another institution, senior executives become involved. They don't threaten you. They don't pressure you. They simply listen and make an offer designed specifically for you. The terms are no longer taken from a standard menu. They are negotiated. Your mortgage rate, credit facilities, investment access, liquidity arrangements, and banking services can all be structured around your circumstances. You realize something uncomfortable. At this level, the rules that seemed absolute when you had $10 are suddenly flexible. The bank never told you the rules were flexible. It told you they were fixed. They were fixed for people whose accounts were too small to justify negotiation. Level 9, 250 million. At 250 million, your relationship with the bank becomes institutional. You have a team. A private banker, investment strategist, tax specialist, estate planner, lending specialist, and sometimes even lawyers working alongside them. You don't ask whether a transaction can be done. You ask how it should be structured. When you need financing, the bank doesn't simply look at your salary. It looks at your assets, your businesses, your relationships, your future cash flows, and the entire structure of your wealth. You are no longer trying to qualify for money. Money is trying to find the safest and most profitable way to reach you. One evening, you attend a private dinner hosted by the bank. There are 12 people in the room. Nobody introduces themselves by saying how much they have. Nobody needs to. Everyone already knows why everyone else is there. The bank executive gives a short speech about partnership. You look around the room and realize that partnership is what they call it when the relationship becomes too valuable to describe as customer service. Level 10, $1 billion. At $1 billion, the bank doesn't simply manage your money. It plans around it. Executives know your account. Senior investment officers know your preferences. Deals are presented to you before they reach ordinary investors. If you want exposure to a new industry, the bank can assemble a team to study it. If you want to acquire a company, the bank can help structure the financing. If you want to create a foundation, the bank can help build the financial structure around it. If you want to move billions across different assets, entire departments become involved. Nobody talks about minimum balances anymore. Nobody mentions monthly fees. Nobody asks you to wait for a manager. The system that once charged you $35 for being short a few dollars now assigns people to protect your relationship. You think back to the beginning. 500, 3,000, 20,000, 100,000, a million, 10 million, 50 million, 50 million, 1 billion. You were the same person at every level. Your intelligence did not suddenly increase. Your work ethic did not suddenly appear. Your humanity did not become more valuable. Only the number changed. Somewhere right now, someone is checking their bank account before buying groceries. They have 17 left. A bill is about to come out. They are calculating whether they can afford dinner. They will probably pay a fee this month because the system is designed around minimums they cannot maintain. Somewhere else, someone with 17 million is receiving an email from a banker asking whether they would like to review a private investment opportunity. Both people are customers of the same financial system. Both have names. Both have families. Both worry about the future. But one is given a phone tree while the other is given a direct number. One is told the rules cannot be changed while the other is invited to negotiate them. One pays more for money because they have less of it. The other pays less because they have more. And that is the part nobody explains when you open your first bank account. Banks don't simply reward wealth. They often make wealth cheaper to maintain. The less you have, the more every mistake costs. The more you have, the more expensive mistakes become for the bank to let you make. At $10, you are a transaction. At $500, you are a potential borrower. At $3,000, you are a customer. At $20,000, you are a profitable customer. At $100,000, you are preferred. At $1 million, you are a relationship. At $10 million, you are a priority. At $50 million, you are an asset. At $200 million, you are a partner. At $1 billion, you are part of the institution's strategy. The strange part is that the bank didn't suddenly become kinder as your balance grew. It simply became more interested. And sometimes, indifference feels exactly like cruelty when you are the person standing on the wrong side of the number. You were never invisible because you had no value. You were invisible because the system had decided your value was too small to notice. The number changed, and suddenly everyone could see you.